Gold and silver just exploded to record highs, and this move didn't come out of nowhere. While most people were distracted by stock market noise and short-term headlines, something much bigger was building quietly underneath. In a matter of days, precious metals surged as fear, uncertainty, and global tension rushed back into the financial system. This wasn't hype, this wasn't social media speculation, and it definitely wasn't random. This was the world reacting to risk, and when real risk shows up, money runs to safety fast. Before we go deeper, if you want clear, no-nonsense analysis on gold, silver, and the real forces shaping the global economy, make sure to like this video and subscribe right now. This channel, Last Ounce Theory, exists to help you see what the mainstream ignores, and your support helps keep this content coming. Now let's talk about why this surge really happened. At the center of it all is geopolitics. When political tensions rise, markets don't wait for confirmation, they move immediately. Trade threats, regional conflicts, unstable diplomatic relationships are pushing investors out of risk assets and into safe havens. Gold has always been the first place money hides when confidence breaks, and this time was no different. The speed of this rally tells us something important. Fear returned faster than most expected. But gold didn't move alone. Silver followed closely, and that matters. Silver is not just a monetary metal, it's deeply tied to industry. When silver rises alongside gold, it signals more than fear. It signals stress across both financial and industrial systems. Investors are starting to price in supply issues, slowing global growth, and the possibility that economic conditions are weaker than official numbers suggest. Another powerful driver behind this surge is currency weakness. As major currencies lose purchasing power, gold and silver naturally rise. This isn't about speculation, it's about protection. When people sense that their money buys less tomorrow than it does today, they move toward assets that can't be printed. That's why gold doesn't need good news to rise. It only needs uncertainty. Central banks also play a silent but critical role here. While retail investors debate price targets, central banks continue accumulating gold quietly. They don't chase trends. They prepare for instability. Their actions send a message without words. Trust in the global financial system is not as strong as it appears on the surface. When the biggest institutions on earth choose gold, markets pay attention. Silver's surge carries an additional warning. Industrial demand remains strong, especially in energy, technology, and defense sectors. At the same time, above-ground silver inventories are tightening. This creates a pressure point where even small increases in demand can cause sharp price moves. When silver starts behaving less like an industrial metal and more like money, volatility increases, and we are seeing early signs of that shift now. What makes this moment especially important is timing. These record highs are happening while stock markets are still relatively elevated. It tells us capital is hedging, not celebrating. Investors aren't confident enough to go all in on growth, and they aren't comfortable sitting in cash either. Gold and silver become the bridge between fear and uncertainty. Some people are asking if this rally is already over. History suggests otherwise. Major moves in precious metals rarely end quickly. They tend to unfold in stages, driven by psychology as much as fundamentals. First comes disbelief, then attention, and finally urgency. Most people are still in the disbelief phase, and that's often where the biggest opportunities quietly exist. At Last Ounce Theory, we focus on understanding behavior, not just price charts. Right now, behavior is shifting. Safe haven demand is back, trust is fragile, and markets are reacting emotionally rather than logically. That environment favors metals that represent stability, history, and permanence. As we move forward, the key question isn't how high gold or silver can go tomorrow, but why so many investors suddenly feel the need for protection. That question reveals far more about the future than any short-term price prediction. When protection becomes a priority, it means confidence is already cracking behind the scenes. If this trend continues, we could see gold and silver stop reacting to news and start leading it. That's when moves become faster, sharper, and harder to ignore. And by the time the mainstream fully explains it, the market is usually already far ahead. I'd love to know what you think. Do you see this surge as the beginning of something bigger, or just another temporary reaction to fear? Drop your thoughts in the comments, because your perspective helps shape future videos. And if you found this breakdown valuable, share it with someone who still believes gold and silver don't matter anymore. Sometimes one conversation is all it takes to change how someone sees the financial world. Stay curious, stay prepared, and I'll see you in the next one.